What if there was a way for your money to grow quietly in the background every single day, without you checking charts or stressing over market news? Picture a strategy so simple that anyone could follow it, yet powerful enough to turn regular savings into $1 million portfolio over time. Well, it's real, and I'm about to show you exactly how it works. At the end of this video, I'll share a bonus strategy that can help you get there even faster, and it's something most investors completely overlook. Stick with me, because the next few minutes could change the way you invest for the rest of your life. Welcome to FinTech Innovate AI. We make personal finance and investing simple, clear, and easy to follow. 1. The problem. Why most people struggle to build wealth. The main reason most people never build real wealth is that they try to time the market instead of staying invested for the long term. They think they can buy at the lowest point and sell at the highest, but in reality, that rarely works. Imagine the market dips and fear takes over. Instead of seeing it as a chance to buy more, many sell to avoid further losses. Then, when prices climb again, they feel like they missed out and buy back in at much higher prices. For example, during the 2020 market crash, thousands sold in panic. Just a few months later, the market bounced back to record highs. Those who stayed invested enjoyed huge gains, while those who sold had to buy back at inflated prices. This cycle of fear and greed slowly erodes returns and destroys the magic of long-term compounding. Without a consistent plan, wealth grows in small bursts and then slips away, making true financial freedom almost impossible. 2. An investor story. Meet Alex, an everyday investor who wanted to grow his money fast. He started investing with big dreams, hoping to get rich quickly by picking the right stocks at the right time. Every day he checked his portfolio multiple times. If a stock went down, he panicked and sold. If it went up, he rushed to buy more. He thought he was making smart moves, but in reality, his emotions were controlling his decisions. After a year, Alex realized something shocking. Despite all his effort, his portfolio hadn't grown much. Meanwhile, friends who invested consistently and ignored daily market swings were seeing steady growth. Then he discovered one simple strategy, a method that didn't require constant market watching, didn't rely on guesses, and still allowed his money to grow steadily over time. Once he followed it, everything about his investing results began to change. 3. The simple trick. Dollar cost averaging. The simple trick that changed Alex's investing journey is called dollar cost averaging, or DCA. It's a method where you invest a fixed amount of money at regular intervals, no matter what the market is doing. Instead of worrying about the perfect time to buy, Alex invested the same amount every month. When prices were low, he bought more shares. When prices were high, he bought fewer. Over time, this strategy naturally balanced out the highs and lows of the market. The beauty of DCA is that it works in both rising and falling markets. Alex no longer needed to guess when to buy or sell. He stopped letting emotions control his decisions. Consistent investing became simple, automatic, and surprisingly powerful. It also gave him peace of mind. He could focus on other areas of life while knowing his money was steadily growing in the background. 4. Why dollar cost averaging works. Dollar cost averaging removes the stress of trying to time the market perfectly. You don't have to worry about whether prices are high or low. This greatly reduces the risk of making costly mistakes. It also smooths out the ups and downs of investing. When prices fall, you automatically buy more shares. When prices rise, you buy fewer. Over time, this builds a balanced portfolio without the need for constant monitoring. Another key advantage is that it keeps investors disciplined. By committing to regular investments, you develop a consistent habit. Alex stopped reacting to short-term market swings and focused on steady, long-term growth. This consistency is what separates successful investors from those who constantly chase trends. Over years, small, regular contributions add up in ways that feel almost effortless. 5. The power of compounding. One of the most powerful forces in investing is compounding. This is when your money doesn't just grow, it grows on top of itself over time. For example, if Alex invested $500 every month for 25 years with an average return, his portfolio could surpass $1 million. Even modest, regular contributions can grow into significant wealth if given enough time. Compounding works best when you start early and stay consistent. The longer your money has to grow, the more it multiplies. Patience and consistency become your most valuable tools for building long-term wealth. This is why starting today matters. Every small step now can lead to enormous growth decades later, making time one of your most powerful allies in investing. 6. The psychological advantage, dollar cost. Averaging takes the emotion out of investing. By investing the same amount regularly, you no longer worry about whether the market is up or down. Consistency becomes more powerful than trying to predict every market move. Alex stopped overthinking every decision and started trusting the process. Over time, investing turned into an effortless habit. It no longer felt like a stressful task, but a simple routine that quietly built wealth in the background. 7. How to start today. Starting your investing journey doesn't have to be complicated. First, choose a diversified index fund or ETF that spreads your money across many companies. Next, set up automatic monthly transfers from your bank account. This ensures you invest consistently without thinking about it, making the process effortless and disciplined. Finally, ignore short-term market noise. Prices will go up and down. By staying consistent and patient, your investments have the time to grow steadily and take advantage of compounding over the years. 8. The long-term mindset. Building real wealth doesn't happen overnight. This strategy is not about quick wins or chasing the latest market trend. It's a proven, reliable path that grows your money steadily over time. Patience is key. There will be ups and downs, and the market will not always move in your favor. By staying consistent and sticking to the plan, you give your investments the time they need to grow and work for you. Remember, true financial freedom comes from steady, disciplined investing, not luck or timing the market perfectly. 9. Bonus tip: how to supercharge your millionaire goal. Here's a bonus strategy to speed up your journey to $1 million. Whenever you get a raise, bonus, or any extra income, increase the amount you invest. Even small yearly increases can make a huge difference over time. By boosting your contributions gradually, you give your portfolio the power to grow faster and reach your goals sooner. This combines the simplicity of dollar-cost averaging with accelerated contributions. It's a simple habit that can dramatically shorten the timeline to financial freedom and multiply your wealth over the years. Now you know the one simple investing trick that can help your money grow steadily over time. You also have a bonus strategy to accelerate your journey to $1 million. The key is consistency, patience, and letting your investments work quietly in the background. By following this approach, financial freedom becomes not just possible, but achievable. If you found this video helpful, make sure to like, subscribe, and share. Here, we share simple, actionable strategies to grow your money, build wealth, and take control of your financial future. Start today, stay consistent, and watch your wealth grow. Your future self will thank you. Thanks for watching.